We just issued last week our 85-page, which we had outside on the table, and if we ran out, I can email them to you. Our 85-page tech report and a 20-page outlook for 2012. So the good news is that from a tech perspective, 2012 looked much better than we would have thought. And how do we do our research? Well, we bug people like poor Sue. We bug people like poor Scott and his entire management team, which they were incredibly helpful. And we also, I would say, we read everything we can possibly get our hands on. And I'll tell you what's different for us in 2012 versus 2011. I felt in 2011 everyone was like, oh my gosh, we have to spend more, but we don't know what to spend it on. And our CEOs are saying, go out and spend more, but we really don't know what to do. And this year, everyone seems very calm, and there's a very clear vision, and everyone kind of seems to know more what to do and more in terms of the direction to head. So it feels like, that's why I said defense to offense. You guys have a much more clear vision, know where you're going, and it feels to us like, right, Amazon has kind of laid a direction, they've laid a path, and you guys said, hell no, we won't go, we're going to go do something about it. And you are. What happened in October, November, December was an increase in consumer confidence. And right, we had one of the strongest Black Fridays in 6 years. It was a very interesting, I would say, data series. Housing market has continued to be weak. And as Clinton said today, we need to do something to get that cleaned up. I would wholeheartedly agree, because we're not going to see a real strength return to housing goods until that happens. And for many of the retailers that I follow, about 20% of what they sell is home related. So it's obviously an extremely important category. This, I think, is hopefully one of the things you're in this room to figure out, is what do we as retail analysts, what do we as Wall Street analysts look for in terms of when Scott is making a decision, maybe to work with Sue, are we like, are you out of your mind, Scott? Or are we like, that's the best decision you've ever made? Because you've seen some projects really go well, and then you've seen some other projects, I'm not going to name retailers today, you've seen some others really go not so well. And, and I think a lot of times when the CIO makes a decision, it's so important to get buy-in from the CEO, because it's all about the culture in the organization. Matching the technology to the strategy. So if one of the important things is to take down the number of weeks, we call it cycle time reduction. If that's, that was, I would say a year or two ago, that was like the most important thing on Wall Street. I mean, 52 weeks, give me a break. That was, you were like, when we heard that, that was like, you're just like, you gotta be kidding me. And now we're hearing 39, my word, 39 weeks, maybe 30 weeks. That's been a significant, with SARS and everything, that was kind of the real, I would say, catalyst. But Wall Street really pushing the retailers, and then the retailers saying, hey, Sue, you gotta do something about this. That's what we have seen in terms of, one of the big changes. And then the time frame for implementation. So why was Scott so successful? 16 weeks. His projects would get done in 16 weeks. You know what? We don't want ERPs. 4 years, no effing way. If you tell me something, because you know what? Things blow up in 4 years. CIOs leave, CEOs leave. And so nobody owns the project. That is just too long. Anything over a year, for me as an analyst, first of all, my price targets, everything's 12 months. So anything that looks beyond, and if you can take a 4-year project and divide it up into 1-year chunks, that's great. But only tell me about what's happening in like the next 12 months. And this whole idea of like an omni-channel supply chain is becoming more and more important. So I would tell you that that's probably one of the biggest changes on Wall Street, is looking at inventory turns and inventory productivity and inventory per foot. I would probably tell you in 2012, that is going to be the biggest change in terms of questions being asked on analyst calls, I guarantee you. Streamline the product pipeline with merchandise lifecycle management. So last year, everyone, I think freak out is a good way to put it. Right, when you're hearing that product out of Asia is going to go up 10 to 15%, and now, right, we're still hearing that wages are up, and right, gas prices, depending on who you talk to, that we're going to see increases in transportation costs. Everyone is still very focused on this. So as retailers can become more sophisticated in how they're buying product, so like I said, we all call it cycle time reduction, connecting with suppliers on the B2B marketplace. And so this idea that retailers can speed up the merchandise pipeline. And so you have in this world, if you will, the ability to communicate faster. It's all about reducing cycle time and driving product innovation. So you really have, you've got Bamboo Rose, you've got Agentrix and Global Sources. So, I mean, you've got a few companies. This is really new. I'd say we're really young here, and that's why I think it's a very exciting and interesting, kind of key technology trend. So I'm going to end here. So where do retailers stand on the technology continuum? Because I'm going to give props to Scott. So every year we go through, and like I said, this year the companies were incredibly helpful, which also tells you something. A lot of times the companies haven't talked to us in the past. This year everyone talked to us. They were supportive. They were helpful. They wanted to make sure we understood the technology in their stores, what they're doing, what's different. And they also wanted us to feed back to them anything that they're not doing that we thought that they should. Family Dollar moved up quite a bit on our retail technology continuum. Right there next to Dollar General, who Dollar General's obviously had a huge amount of support. They went private. They've had, a huge amount of support from their private equity partners. And, right next to Target and Walmart there. So what we've seen is the department stores kind of as a group are all there together. And let's be honest, CVS and Walgreens have to be at the far end of the right, because if they don't have good technology, they're going to kill you.
Deb, you travel overseas quite a lot, visiting suppliers and looking at the retailers' operations overseas. What makes you comfortable and what makes you shudder?
So I think one thing that's been very interesting is we're starting to see, especially with inflation, retailers moving out of Asia. And I think there's good and bad in that. So, right, we're seeing the move into Indonesia and Vietnam and Cambodia, and we're even starting to hear about Africa. So I think those who are moving with sophisticated partners such as a TradeStone, I think that gives us confidence that they're kind of moving with companies there that have knowledge of the countries and the manufacturers and whatnot. Where we get concerned is when they're doing it sometimes just completely on their own. And literally they'll be like, oh yeah, we just we flew to Indonesia today and we're walking around and trying to figure out what factories to work with. That does concern us a bit. So, but when they're working with a trusted partner like TradeStone, I think that makes us feel a little bit better.